Welcome to Tim's Strategy of the Week series. Several of you asked for some scalping type strategies, so today we've got one. The 1-minute aggressive trading strategy. Stay right where you are. Hi, this is Tim from TradingStrategyGuides.com. Thanks for coming back for this installment of the Strategy of the Week. Well, December is rocking right along, isn't it? I can't believe this year is finally wrapping up. Several of you asked for a scalping strategy, so here you go. We're going to look at the 1-minute aggressive trading strategy. It's definitely not for the faint of heart and will require you to stare at charts for the whole trading session. But if that's what you like to do, then this one is for you. It can be easily adapted for any volatile market, from stocks to futures to Forex and everything in between. Let's get on this. Let's start this off by explaining aggressive trading. An aggressive trader is one who is willing to take on higher risk in an attempt to maximize profits. Very aggressive traders are comfortable with larger drawdowns if it results in more profit. The key characteristics of aggressive trading are: you're open to more risk using leverage or larger position sizing. You aim to generate quick profits through day trading. And you seek to generate alpha returns and beat the market performance as measured through the S&P 500 index. The opposite of the aggressive trader is, of course, the conservative trader, who is more risk averse. I'm going to be straight up with you guys. When I started, I was a much more aggressive trader than I am today. Maybe getting older makes us more risk averse. Of course, I used to climb 500-foot rock walls when I was 40, and I don't do that anymore. So maybe it applies everywhere in my life. The idea behind aggressive trading is taking on more risk and subsequently accepting a larger loss. Risk-tolerant traders will grow their portfolios by taking 10 steps forward and 5 steps back. This is different from other trading strategies, which are more focused on taking just one step at a time. But we're only going to accept more risk when the market is conducive to our trading style and our strategy. So this is going to differ from trader to trader and strategy to strategy. For example, if you prefer a high volatility environment, you only want to risk more in this type of environment. The plan is to press the accelerator pedal a little harder than we would in a low volatility trading environment. I know I've said it thousands of times, there is no one-size-fits-all trading approach for traders or the market. Certain things will only work under certain market conditions with certain traders. There are 4 methods to trade aggressively. Adding to winners as the market moves in your favor is probably the easiest method to chase profits. The perfect time to scale into your position is when the market moves in your favor and then pauses for a short period of time. Repeat the process and continue to add on each pause or pullback. The theory behind this aggressive trading strategy is to let the winner run and then add some more to increase your profit potential. Adding more markets into the mix is another way aggressive investors make more money. When you trade more markets, you trade more frequently and subsequently have more risk. For example, you can include aggressive shares like penny stocks, which can potentially produce higher gains. Aggressive trading works a little bit differently than conservative trading. An aggressive entry allows traders to enter the market right from the beginning of the price movement. In other words, we're looking to catch tops and bottoms. However, for this to work, timing the market needs to be on point. Timing the market all comes down to 2 things: your skill at picking a good and accurate price level, and your ability to execute the trade right before the market starts moving. An aggressive entry method is to buy or sell at the market once those 2 trading conditions are satisfied. For example, if your favorite stock hits your support level during the first 30 minutes after the opening bell, don't wait for more confirmation. You just immediately buy at the market. You will only develop those skills with practice, practice, practice. You need to know when to be more aggressive in taking profits. In all except Forex markets, of course, bull markets are different than bear markets. You'll need to have different strategies. In bull stock markets, it's better to ride the trend. So it's best to let the profits build and don't be that eager to cash out. However, in bear stock markets, you need to be more aggressive with your profits because downtrends are shorter in duration. At the same time, pullbacks are short-lived, so in this scenario, it's best to cash in as fast as possible. As the old saying goes, stocks take the staircase up and the elevator down. And I say sometimes they just fall right down the elevator shaft. Of course, with Forex markets, because they have no intrinsic value and you are trading one currency against another, a bull market for one currency is a bear market for the other currency, so you can spend more time riding trends in either direction. Now that the preliminary stuff is out of the way, let's talk about the 1-minute aggressive trading strategy. Shorter time frames give you the opportunity to trade more frequently, and if you trade more frequently, you're an aggressive trader. So we're going to talk about aggressive trading using the 1-minute chart. The trading rules are pretty simple to follow. Bear in mind that you need to be quick and take profits without hesitation. The theory behind this strategy is to buy pullbacks in an uptrend and sell rallies in a downtrend. We're going to use the stochastic indicator as a guide to time the buying and selling spot. Secondly, we're going to use a trend line to gauge the trend. Let's look over a real example on the stock Twitter and see how this works. Keep in mind these rules can be applied to any other market, including the Forex market. So we want to start with a trend line. To draw a trend line, we need at least 2 points of connection. In this example, we have 2 lower highs as our points of connection. This indicates we're in a downtrend, so we want to sell rallies into this trend line. For this setup, we're going to use the stochastic indicator to identify the overbought condition as we retest the trend line. Our entry strategy is to sell touches or approaches of the trend line with the stochastic indicator showing an overbought condition. Ideally, I would wait for a candle close to make my entry, which won't take too long on a 1-minute chart. For our exit, we'll close our trade when we hit a prior swing low. So for this first one, we would likely have gotten out either here or here. Again, I would wait for a candle close before I exited. Your challenge with the scalping strategy will be to find a decent short-term trending environment. The second danger you face is that you're constantly focusing on a very short-term time frame and you miss what's going on the higher time frame. Usually the higher time frames are the fuel to the fire. Smart money moves over a period of days and weeks. That's how the big money flows into the market. Due to liquidity constraints, you just can't execute big volume trades on the 1-minute time frame. What I mean by that is that it is tough to get entry and exit fills in due time when trading large volume on a short-term chart. Of course, that's a smaller problem if you're trading Forex. As I mentioned, aggressive trading is not for the faint of heart. You need to be able to deal with a high level of stress and be very quick in your decision-making process. The most important lesson takeaway is that you need a high tolerance for risk to succeed with aggressive trading. I encourage you to test these aggressive trading setups with a paper money account before putting real money at risk. To sum it all up, here are the top 4 aggressive trading strategies. Number 1, add to winners. Number 2, trade more markets. Number 3, be more aggressive with your entries. And number 4, be more aggressive with your targets. What is your investing style? Are you conservative or aggressive? Let me know in the comments below. That's all for this week's strategy. Stick around and let me take a minute to point something out. I've noticed that I get a higher number of views on these strategy videos than I do on the trading picks videos. In fact, it's almost twice the number. So I want to take this minute to toot my own horn. I know you guys are looking for the big score. I get it. I like big scores too. But I suggest that you can continue to look for the big score, but make a little money on the side in about 15 minutes a day. And when I say a little money, I mean that I have successfully outperformed the S&P 500 for a couple of years now. This spreadsheet shows the last few months of performance on my trading pick. If you watch Monday's videos, you'll see that I set these up in advance, sometimes way in advance, and track them once they trigger. As of now, I've increased my trading account by 82% since April of 2019 using my trading pick strategy, typically with only 2 or 3 trade setups per week, actually. In fact, we just rode a huge Bitcoin wave from $10,840 to $18,300 for an account gain of 7%. And that entry is right there. So take a few minutes to check out my Monday Trade Picks videos and trade with me. You won't be disappointed. Okay, I'm done with my shameless self-promotion. Let's take a minute to go over my active trade picks just to bring you all up to speed. We bought Tesla here at $486.64. It hit our target a couple of days later. Now we've trailed our stops up to $538.52, locking in $51.88 per share. We survived this little pullback couple of days ago, and now it looks like it may be headed back up again. We sold gold at 1837.21. It hit the first target the very next day, right here. We got half off in profit and set the remainder to break even, and that break even stop was hit on Thursday. So we're out of gold with 0 on the second half for a 0.33% account gain, and it was only 0.33% because this was a half size entry due to reduced volume here on the trigger day. We bought TUI 74.25 right here. It popped up, hit our first target, and then dropped a couple of days ago and hit our break-even stop on the second half. Again, 0.33% account gain because this was once again a half-size entry. We entered American Micro Devices at 92.66. Hit our first target a couple of days later right here. Dropped down Thursday and hit our stop loss. Since this was a full-size position, we have a 0.67% account gain on this one. Guys, that's it for today's video. Be sure to come back next Wednesday at 3 p.m. as we continue the next module, Trading Strategies, in our Trading Education series. Don't miss my Trading Picks of the Week on Mondays and my Strategy of the Week on Friday, right here at Trading Strategy Guides YouTube channel at 3 p.m. New York time. Be sure to subscribe and hit the bell so you'll be notified when these videos come out. Have a great weekend, and I'll see you with a couple of trade picks on Monday.